And for an early look at what we can expect from the local market, we're joined now by Evan Lucas from IG in Melbourne. Evan, welcome. Look, Bernanke's testimony really reverberating around the world economies. What will this mean going forward today?
Yeah, it's a very interesting sort of situation now that we've seen Bernanke coming out and obviously reiterating what he's been reiterating for probably about 7 or 8 months until we saw what happened in May when he did start to suggest that tapering was there. It's all about his communication. It probably hasn't changed in terms of what's actually been said. He's just getting a little bit more direct in how he actually says it. And the most sort of quoted sort of comment out of yesterday was the fact that he said that highly accommodative monetary policy in the US is currently going to be here for the foreseeable future and what is needed. Now, having a look at that, we're obviously about sort of 6 or 7 days away from really getting into US reporting season, and we do look like JP Morgan and also Wells Fargo being a real sort of bellwether sort of start for them, and it does look like, looking at the forecast heading and going forward, being quite strong. And with that in mind, it therefore puts a bit of a floor really on the US market. We saw the S&P making a record all-time close last night at 1675, and it's now only 9-10 points away from that intraday all-time high. So it does mean that there's going to be a little bit more of accommodative from the markets. They are going to actually have a bit more of a bit of a breather and actually have a chance to reassess where it looks at. They know that tapering is coming, but they now understand, and he's been very, very clear about this, that their levels in inflation and also in unemployment are levels. They're not triggers, they're levels. They're going to basically reassess when they get there, and at the moment it doesn't look like happening anytime soon. We've seen yesterday that the unemployment claims actually came in above what most people had expected at 360, and that's actually probably not unexpected considering that these people have fallen off the records. They've been probably out of work for such a long time. They've fallen out of the official numbers, and they're now starting to filter back in. So all of this does sort of suggest that we're going to see Fed tapering being probably held off till later in the year, starting next year. The market now knows it's prepared for it, and it just gives it all a little bit more confidence and a little bit more direction as Bernanke's sort of comments and statements become more sort of direct and also more understanding from the market's perspective.
And there seems to be that distinction drawn between tapering and tightening that the market likes. Now, what about the effect on gold stocks and gold in general based on this stance?
Yeah, look, gold stocks yesterday, both over here in Australia and also in Canada and the US, absolutely exploded on these comments. We have probably seen them being shorted probably very, very heavily over the last 4 or 5 months. For obvious reason, production costs are very high and gold absolutely tanking. We saw 15-20% moves yesterday in the mid caps, and even your Newcrest minings of this world jumped up around about 12%. And having a look at that on a more medium to longer term basis, with the Fed now looking at holding off on tapering, it is good for gold. It means a lower yielding environment. It means the US dollar as an investment vehicle starts to sort of lose its luster, and people will move back into the store of value. It's probably going to see gold a little bit higher, probably into the $1,300 mark again after being pushed down quite low. And that, for the gold stocks, which have had an absolute torrid time, should see them actually finally legging up a bit. Most of them are starting to try and rein in those big issues in production costs and trying to bring that back in line with where it should be. They've also had a massive confession session over the last couple of weeks as well, downgrading their guidance. And with, again, earnings season coming, any sort of inline or slightly beat of those new guidance may actually help them legging higher, considering how big the short position's been in there. So it is a little bit of good news for them. I'm still not overly enthralled by the gold sector as a whole, but it should see them a little bit higher in the shorter term. And if they do have a good earnings season, maybe actually holding off on what has been a fairly bad time for them over the last couple of months, Nigel.
Yeah, quite volatile in that gold space at the moment. Now, our market finishing at a 6-week high yesterday, 3rd straight sessions of gain. SPY futures pointing towards a positive start for us. What's your outlook on the market today?
Yeah, exactly what the SPY is showing. Our markets obviously see that we're probably going to be up around about 37 points to about 49.88 on the open. It does look like we may even sort of push way into the 90s this morning as well, as more people assess what's going on in the materials play. BHP and Rio were up 3.5% and 5.6% respectively in London last night, and BHP's ADR is suggesting about a 2.5% gain. So it does come back to those commodities plays. A lot of people are positioning themselves for that cyclical situation coming up with earnings season. A lot of people expect them to actually be slight beats, and that's where we're looking very, very closely. There's also talk around the markets that Santos may or may not be under sort of some takeover rumour. It's raised somewhere around the lines of about 9% in 10 trading sessions, as a lot of people start to see it as a good Asian-facing story, and that's also what we're watching. So that cyclical plays, those material plays are what we're watching very closely today, Nigel, and hopefully we make it 4 days out of 4.
Stocks that you're watching today, in terms of Billabong especially, Laura Inman coming out yesterday saying they've turned the corner in the US.
Yeah, look, Luna Edmonds very much got on the front foot over the last 4 or 5 days and actually come out and started talking Billabong up. They're trying to show that the US story is back on track. They are looking very much at divesting places that shouldn't be there, particularly sort of West 49 over in Canada and all the retail sort of department stores that they have access to. It will probably see Billabong back on the wires, but in terms of where the market sees it, they need to see earnings. They need to see some sort of guidance that actually shows this